Sound of a subtle, high-tech hum, then a crisp, almost metallic ding. Narrator asterisk forget the headlines. Today, the market's extreme fear at a 12 on the Fear and Greed Index isn't a barrier, it's the fuel for an unprecedented short squeeze in semiconductors, driven by a quiet but critical shift in Trump's policy rhetoric. Narrator asterisk the iShares Semiconductor ETF, SOXX, is up 3%, not on earnings, but because our proprietary policy risk model just downgraded Trump's tech tariff threat from level 3 to level 2. The lab rates SOXX a hold plus, momentum is real, but fragile. Then there's SOXL, the Direxion Semi-Bull 3X ETF, exploding 9.1%. This isn't just leverage, our supply chain analytics are flagging an unexpected inventory replenishment cycle kicking off today, creating a perfect storm for the bulls. We're calling SOXL a strong buy. Conversely, SOXS, the Direxion Semi-Bear 3X ETF, is down 9%. Its core short thesis is collapsing under the weight of this policy pivot and inventory reset. The lab rates SOXS a strong sell. Narrator asterisk in the next 10 minutes, we're dissecting the exact hardware realities behind these moves, mapping the macro forces that are blindsiding the bears, and revealing the insider signals you need to see. Prepare for the definitive Denver stock lab verdict. Let's go. Good morning. Today, the iShares Semiconductor ETF, SOXX, is up 3.01%, trading at $338.54. This move is structurally driven by a softening in rate hike expectations, reflected in the market's reaction to recent economic data, specifically the CPI at 0.6% year-over-year. This eases pressure on future earnings multiples for growth sectors like semiconductors. Visual, SOXX one-day chart with top 3 holdings overlay. Looking inside SOXX, we see Micron Technology, MU, a key memory manufacturer, benefiting from anticipated increases in CapEx spending in data centers, which directly drives demand for high-bandwidth memory. Applied Materials, AMAT, a critical equipment supplier, also sees tailwinds as foundries like TSMC signal continued expansion, translating directly into AMAT's order book. And, of course, NVIDIA, NVDA. Now, let's unpack the fun DNA of the iShares Semiconductor ETF, ticker SOXX. Visual, SOXX fact sheet overlay. This fund manages an impressive AUM of $12.5 billion, with an expense ratio of 43 basis points. Given its 3-year average return of 31.3%, that fee is certainly justifiable, especially considering its YTD performance of 16.96%. Looking at the top 5 holdings, NVIDIA, Broadcom, AMD, Micron, and Applied Materials, these represent 40.5% of the fund's total assets. Visual, pie chart of top 5 holdings. This concentration is not a flaw, it's a strategic weighting towards the critical players driving innovation. NVIDIA and AMD capture the AI compute and data center growth. Broadcom dominates networking and storage. Applied Materials is essential for foundry equipment. Micron. Visual, SOXX 6-month chart with RSI and moving averages. The iShares Semiconductor ETF, SOXX, currently presents a nuanced technical picture. Its relative strength index sits at 54.3, indicating neutral momentum, neither overbought nor oversold. However, both the 20-day and 50-day moving averages are converging at $338.54, with SOXX trading above this level, suggesting a fragile uptrend that lacks strong conviction. The MACD histogram confirms this, showing a bearish momentum crossover. We see immediate support at $321.61, with resistance at $355.47. Now, let's filter the narrative. iShares positions SOXX as a core technology play, and on the surface, its staggering 1,695.7% year-to-date return certainly supports that. The lab's verdict on SOXX centers on its structural alignment with the AI and cloud computing supercycle. This isn't just a cyclical bounce, it's a foundational shift in demand for high-performance silicon, directly benefiting SOX's diversified portfolio of fabless designers and equipment manufacturers. The fund captures this secular growth. However, the primary risk remains geopolitical. U.S.-China trade tensions, particularly export controls and tariffs, directly impact the revenue streams of key SOXX holdings. Visual, overlay a map showing U.S. export control restrictions on China, highlighting key semiconductor product categories. This isn't theoretical, it translates into higher input costs and restricted market access, eroding margins. Our AI ETF score of 62 out of 100 reflects this balanced outlook. We are watching the $321.61 support level. A sustained break below this, especially on increased volume, would signal. Good morning. The Direxion Daily Semiconductor Bull 3X ETF, SOXL, surged over 9% today, closing at $52.26. This move is structurally driven by the market's repricing of future demand in the memory and capital equipment sectors, following a significant uptick in institutional flows. Visual, on-screen graphic displaying SOXL's daily price chart with a 9.08% increase highlighted, alongside logos of Micron, Applied Materials, and NVIDIA. Looking inside SOXL, we see its leveraged exposure to key players. Micron Technology, or MU, a dominant force in DRAM and NAND memory, is a primary driver. Today's uplift reflects renewed confidence in enterprise and data center spending cycles, directly impacting MU's forward guidance. Applied Materials, AMAT, captures the capital expenditure side of the semiconductor industry. Its performance is tightly coupled with foundry expansion plans. Visual, SOXL Fund Fact Sheet. Let's dissect SOXL's DNA. This Direxion fund, with its undisclosed AUM and expense ratio, presents an immediate red flag. Transparency is paramount in leveraged products. The stated YTD return of 4,940.8% against a 3-year average of 38.7% is a stark illustration of volatility, a common characteristic of 3x leveraged instruments. This is not a long-term hold, despite what some retail narratives suggest. Visual, Top 5 Holdings Pie Chart, MU, AMAT, NVDA, AMD. Now, to the holdings. The lab notes that the provided top 5 holdings of MU, MAT, NVDA, and AMD are all listed at 0%. This indicates the fund primarily uses derivatives to achieve its 3x leverage, rather than direct equity. Visual, SOXL daily chart with RSI, MA20, MA50, support, resistance lines. SOXL's technical posture shows an RSI of 52.2, with both the 20-day and 50-day moving averages converging at $52.26. This indicates a consolidation phase, with current price action testing immediate resistance at $54.87 and holding support at $49.65. While MACD suggests bearish momentum, the tight MA convergence implies a pivotal point for directional movement. Now, let's filter the macro noise. Headlines are saturated with Trump tariff uncertainty and trade war fears. For SOXL, this narrative is a direct risk. The lab assesses that the semiconductor sector, with its intricate global supply chains, is acutely vulnerable to protectionist policies. Any escalation directly impacts revenue streams for major holdings like NVIDIA and we at the lab see a bull case for SOXL, driven by the growing demand for artificial intelligence and 5G technologies. This macro tailwind is a key structural reason to hold SOXL. However, the bear case is that concentration risk, with top holdings accounting for a significant portion of the fund, poses a threat. Visual, SOXL holdings chart, shows the diversification across its top holdings, but we still need to be cautious. Our final verdict is that SOXL is a high-risk, high-reward play, with an AI ETF score of 62 out of 100. We're watching the $49.65 support level, and a bounce from this level could be a buying opportunity, given the extreme fear sentiment in. Today, Direxion's SOXX ETF, the daily semiconductor bear 3X shares, moved down 9.03%, trading at $36.26. This isn't just market noise, it's a direct consequence of institutional capital rotating back into core semiconductor plays, betting against the bear thesis that SOXS embodies. SOXS is structured as an inverse 3x leveraged ETF, meaning its performance is designed to move in the opposite direction of the daily performance of the PHLX Semiconductor Sector Index, SOXX, by a factor of 3. Its top holdings aren't individual stocks, but rather a basket of derivatives, swaps and futures, designed to short the underlying index components.
Visual, animated graphic showing SOX's inverse 3x leverage mechanism against the SOX index.
When the SOX index rallies, as it has today, every component, from NVIDIA.
Visual, SOXS fund fact sheet with AUM and expense ratio highlighted. Let's dissect the Direxion daily semiconductor bear 3x shares, ticker SOXS. The lab notes its AUM is not published, which is common for leveraged funds, but its expense ratio is a notable 99 basis points. This fee is exceptionally high, especially considering its long-term performance. Visual, SOX YTD and 3-year performance chart. SOXS aims for a -300% daily return of the ICE Semiconductor Index. Its year-to-date return is a staggering negative 4,288.9%, and its 3-year average is down 76%. This underperformance is directly tied to the sustained bull run in semiconductors. The fund's top holdings are essentially short positions on the underlying index components, hence the 0%. Now, let's apply the lab's flow and narrative filter to SOXS. The technical setup here indicates a clear bearish bias. With an RSI of 43.0 and both the 20-day and 50-day moving averages converging at $36.26, SOXS is signaling decelerating momentum. This is further reinforced by bearish MACD momentum. Visual, overlay SOXS chart with RSI, MA20, MA50, and MACD indicators highlighted. The fund's declared narrative as trading inverse equity aligns with its structure as a triple leveraged bear fund. However, we must filter the macro headlines through a geopolitical lens. While headlines citing Trump tariff uncertainty and trade war fears might intuitively suggest a tailwind for a semiconductor bear fund, the lab sees this differently. We interpret these as lagging indicators. We see one structural reason to hold SOXS, which is the potential upside catalyst of a significant decline in semiconductor stocks, driven by the decline in demand for semiconductors used in smartphones and personal computers. However, the bear case is strong, with a specific risk being the concentration of the fund's holdings, which makes it vulnerable to sector headwinds, such as the decline of Intel and NVIDIA. Visual, SOXS holdings composition chart, shows the top holdings, which represent a significant portion of the fund's NAV. Our final verdict is that SOXS is a high-risk play, with an AI ETF score of 47/100, and we're watching the $34.45 support level as a key catalyst to determine its next. Today's top signal was SOXX and SOXL buys. If you like this video, please subscribe, like, and comment below which stock you'd like us to cover next. Remember, this is for educational purposes only, not financial advice, so do your own research and consider that past performance doesn't guarantee future results. Thanks for watching Denver Stock Lab. We appreciate your support, and we'll see you in the next video.